Hey Villa,
Hey, Paul.
how are you this morning?
I'm pretty good. Pretty good. I actually, woke up this morning and I thought of a joke that reminded me of today's episode. So, you want to hear it?
Absolutely.
Why did the banker park in front of a retirement home?
I have no idea. Why did he?
He was about to start a core banking development project.
Fantastic. I love it. Excellent. Okay, so with that, my friends, welcome everybody to episode 3 of Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies with real-life examples from guests and experts across the board. We seek to bring you the insights and stories from new emerging technologies to game-changing disruptive ideas, brought to us by fintech companies seeking to challenge the status quo with revolutionary ideas and big, fantastic dreams. My friends, this is Fintech Daydreaming. Hello everybody and welcome back to the show. I'm Paul Krogdahl and I will be your host today for this exciting episode. I'm joined, as always, by my charismatic friend and co-host, Villa Sointu. Say hello, Villa.
Hi, everybody. Good to be here.
And today we're going to dive into the core and pounding heart of every bank's operating today. We will take perspective and insights from the past as well as the present day to plot a course for what might be the future for successful banks. We're going to talk about core banking with our fantastic guest, Tom Bentley. Now, Tom is someone with an extensive history in the core banking domain and currently the sales director for Thought Machine, the leading provider of third-generation cloud-native core banking platforms. Tom, welcome.
Morning. Thank you so much for inviting me. It's great to be here. Great to be able to chat about my favorite subject.
Fantastic. Now, the banking industry has for a long time been facing a dramatic digital disruption, which keeps on accelerating. This disruption has been driven by a number of different things, but I believe predominantly by changes in customer behavior, where customers today are used to getting instant gratification and services delivered to them predominantly on mobile devices. There is obviously also a number of other disruptive forces today in banking, such as a growing number of new digital-only neobanks, fintechs and big tech companies, all trying to unbundle banking as we know it to build fantastic new customer experiences that grab our attention and engagement. Well, if only for a minute until we download the next app to see if it's any better than the last one we just checked out. There's also a constant flow of new regulatory requirements constantly stifling the banks and driving for transparency in the name of customer clarity and removal of information asymmetry, which is reducing margins for the poor banks as they proliferate the market with an ever-growing number of new products. Products we as consumers do not understand and probably do not need at the end of the day. But the most significant disruptive change to the financial industry will be the coronavirus. The spread of this virus and the subsequent government measures will have a lasting global impact on the banks and will put digital transformation back at the center of every bank's strategy, with a focus on their aging back office systems and processes that have not been updated or changed for years. And for many banks, this brings their beating heart, the critical system keeping them alive, right up and center. I'm obviously talking about their core banking systems. So I suppose a good starting point to this discussion is the current trend of cloud adoption and the move towards cloud-native solutions. Most incumbent banks today have built their core on well-established technologies, safely locked away in their data centers and on-premise. But the new world is moving to a cloud paradigm to support agility and fast innovation. Along with the disruptive pressures the banks are under, come the thoughts and the key question. What can we and should we do with our existing core system to stay relevant and competitive in this fast-moving new digital world? The current discussions are filled with terms such as third-generation core banking, cloud-native core banking, composable banking, and even coreless banking. How would you define the current trends in the banking industry? Actually, Tom, what's your view on this?
Well, look, I thought that was a great introduction. I think it covers a lot of the buzzword bingo that you sort of find in the industry at the moment. I think the best place to start really is sort of looking at the change in the banks. So obviously there's plenty of information out there around, the digital banks, the neobanks, the competitors coming into the space. And I think with that, that's put a huge amount of pressure on those existing core banking systems to be able to, I guess, keep up is the right word in that context. So, traditionally, core banking has always looked at products in a very simplified way, right? So a saving was a saving, a loan was a loan, and almost a ledger was a ledger, right? If you drill down to what core banking essentially is, it's just essentially the customer record and the ability to run those products. Now, with the proliferation of all of the digital capability and all the things that you see on the front end of these amazing apps that are now in market all over the world, adding to what I call cathedrals of COBOL probably isn't the best course of action. And you're seeing that obviously with some major downtime, disruption with many banks all over the world, right, in terms of going through this process. I think where cloud native core banking really is a game changer is essentially the fact that it's so cost efficient in terms of running technology on the cloud. You no longer need these huge expensive contracts for kit or waiting for the tin to arrive on the boat almost. You can spin up and down environments very, very quickly. I think the second thing, obviously, of course, then is that high availability. All of our services are going digital. Customer expectation is 24/7, right? So you need technologies and you need infrastructure that sort of complements that. And I think, looking at sort of where the third generation players are, the availability to not only sort of look at the scale or volume of customers, but also look at the way, in fact, those products are engineered. So you talked a little bit about the cost of change. No longer, writing scripts and scripts of scripts on top of sort of very monolithic, tightly coupled together systems. It just doesn't work right in the context of the amount of change that's coming, not only, of course, from a product point of view, but also from a regulatory point of view in this post-COVID world. I don't know what you think to that, Paul and Ville.
Yeah, I think we covered a lot of ground on those first comments, and maybe just to pick up on a few of those things. So, Paul, you started talking about digital transformation, new services, new customer segments, new types of user experiences, contextual banking, and then going into digital disruption, all the kind of requirements from the regulatory side, and then going down all the way down to the core. Yes. Which I guess is a good kind of way of constructing this narrative around, why is it so hard to, do change from a technological standpoint in a bank. But yes. I guess one of the questions that, some of the listeners might have, especially, one of the two that, is probably not a fintech insider, is the question that, we are still seeing a lot of new services coming out of banks. I mean, if you just look at the any of the Nordic banks, you can download a mobile banking application. You can do payments on a variety of different methods on your phone, for example. You can do P2P. It's all pretty much real time. I mean, the question there then becomes, what is this, all this buzz around these neobanks, and, are they actually that much better in actually innovating? And if they are, is it due to core banking? Is it due to the technical capabilities that they have, or is it actually in the operational setup of these companies? And I think that's an interesting conversation. And I think there's merit to both of these sides of these discussions. You mentioned, Tom, these cathedrals of COBOL, which is a fantastic term that I will probably steal from now on. And that's right. Banks have built layers upon layers on these old core banking systems just to kind of keep up with the digital demands of the new customer bases that we're seeing, and have been able to find some amounts of success there, like I said in the beginning. But I'm sure that as we move on to more real-time economy, we're looking at transaction level data handling, management of intelligent processes. Once we have autonomous actors, for example, in the future, we will have an increasing pressure of even the core not being run on these layers upon layers, but even the core has to be fluid, atomic, modular, real-time, and indeed cloud-based, I think.
Yes.
The time frame when we actually get there is of course debatable, but it's coming in the next couple of years, and that's the technical side of things. I find these cloud native core banking systems quite interesting. Due to the fact that they've kind of been able to build these propositions from scratch, more or less, compared to the legacy of core. But the other side of this conversation, like I said, is really the operational side. If we take this back to the context of incumbent banks, large incumbent banks, especially in the Nordics, versus the challenger banks with typically a cloud native core in their backend. I really think the operational side of these things is vastly underestimated in this narrative. If in the exact same way as you build a tech stack that is very modern, agile, and so forth, if you build an organizational structure and a hierarchy, or indeed lack of hierarchy in the company that allows fast decision making, fast development, and a very efficient kind of lean setup on the organization, you will also find equal, if not more, benefits in fast development out of that fast operational setup. And now, kind of wrapping this up from a common incumbent bank perspective, I think the major change for the incumbent banks is to find the balance between what has been built over the years as an organization to comply to requirements from the regulators and managing risk, and taking a step towards more agile operational setups backed up by these perhaps modern platforms that could be, for example, cloud native. So I think, it's an interesting debate. I don't think it's completely black and white, as nothing is in this world, I suppose. But I think it's going to be an interesting interesting couple of years ahead of us as this transformation is proceeding.
No, I think you're absolutely right, Phil, and I think that brings us on to the next point. As we're looking at particularly the incumbent banks, there seems to be a number of different approaches on moving forwards, right? We know that most of the banks have got technical debt. We know that a lot of them have built their core systems on aging technologies, although I'll be careful in saying aging, right? Because some of the technologies are still quite relevant and quite good. But it does drive a discussion these days in the news around the disrupted becoming the disruptors, and about the large and trusted incumbent banks taking a new position and driving forwards. And that sort of brings us down to these dreaded core banking replacement projects, are often referred to as replacing the engine on an aeroplane whilst in flight. So there's good and bad stories that we're hearing in the press around this. From a perspective of Thought Machine, Tom, and the sort of whole third generation core banking approach, how have you guys sort of helped banks to move in this direction, particularly the legacy banks, right, or from legacy systems to a more modern third generation cloud native approach?
Sure. I mean, I think we touched on all the benefits of cloud native and what that gets you. But just to touch on migration, I don't think migration has changed too much, ironically, in the last 20 years. You see either entities, and there's lots of, tier one organizations we can refer to taking that big bang approach, taking the full, monolith or landscape and trying to simplify that as best as possible. I would say the majority of those have not been a great success, and that's why the joke about the retirement home is very relevant. I think the other side is what we're seeing is the incremental big bang, right? So this is banks who are either creating that perfect model bank stack, almost to use it, or they're creating a new brand to road test sort of the migration, and we see that with a number of our customers. So if you look at Standard Chartered going to Mox Bank, SEB creating SEBX as a brand, there's a really interesting sort of plays, I think, at looking at innovation. I think the one that's really unique that doesn't get talked about a lot is customer streaming. So this idea that, with modern systems, you can actually create a target system of record and maybe just look at, key elements, I guess, of your system that need replacing. So with that, if you coming back to your point about the digital banks and looking at that digital experience, essentially everything comes down to how you, from a core banking perspective, from a system of record perspective, essentially how are you managing that ledger? And I think with the new technologies who can sort of actually be truly microservice driven, you can do that in a really, really interesting way.
Okay. I think maybe, Tom, one of the things that'd be worth doing is just stepping back, and for the listeners who maybe aren't completely up to speed and deeply into the world of banking and core banking like we are, would you mind spending 3 minutes just explaining what is a third generation core banking platform?
Sure. Where do you start? Well, I think in terms of first generation, what you saw was very sort of siloed systems that had a very simplified view of product design. So, for example, I'm picking any bank here. Let's take NatWest here in the UK. They would have a system for customer account, a system for lending, a system for deposits. So over time, essentially, as you add more and more products, you add more variations of products, you essentially build that cathedral of COBOL, to use the phrase that I used earlier. Then from a second generation perspective, you had a lot of sort of technology players come in and look at sort of the reusability of those core banking, products and processes. So these are things like product builders that could build product very quickly, looking at components. So things like, for example, you can share a customer file or an accounting file, but if you wanted to change, for example, the limit or the interest, a great example is Bank of Life. I get my account, bank account when I'm 8 or 7. And when I turn 18, I'm not a young saver anymore, right? I've got to become an adult and go into a big boy product. The management of that and being automated, was very unique at that time for those banks. And then when we come to third generation, and this is where Thought Machine plays, we don't take a traditional product silo view that's sort of the second generation adopted from the first generation. So a good example of that is, if you look at sort of the experiences of some of the neobanks, you could have one card, but also have 6 products linked to that card. I don't need a new bank card sent in the post every time. I open an account with my wife, or, I want to open an ISA or a saving product. All of these things can be digitally processed and can interact with one another. So that really fundamentally, from a product perspective, is sort of the unique journey, I guess, that core banking systems have gone through. The other one, of course, is that cloud nativity. So you think about original systems, although over time they've upgraded their infrastructure, they're able to work on the cloud, in inverted commas. If you look at the actual technologies and the actual processes it takes to truly have microservices or truly be able to do DevOps, so, code in the morning, deploy in the afternoon, and not have to test the whole system necessarily or pick individual components. These are the architectures that, Netflix and Spotify and all the other great technology companies of the 21st century run. So hopefully that gives a good explanation. But for Thought Machine in particular, we've got Google in our blood, in our heritage. It's where our founder came from. So a lot of the practices that, we found in terms of running things at scale, running things, with mass migration, or, when you think about days like Singles Day in China, where there's, billions of transactions happening, in singular periods where you're ramping up and down, that high availability becomes extremely, extremely crucial. So for us, all of the technologies that have come ironically outside of banking now are really excited to seep into that world so that the banking world can see the benefits.
Excellent. Yeah. I mean, so what's after that? What do you think, Villa?
What is after?
Is it blockchain? Yeah. Is it blockchain?
What is after the cloud? Yeah. So yeah. What's beyond the clouds? That's a kind of very philosophical question, I suppose. So yeah, I think well, first of all, to take a step back a little bit, the migration strategies, for example, and I cannot emphasize this enough that core banking is just the technical part of things. For example, you can drop the most modern, ultra modern technical platform in the world into an old organization and see this approach, not being as successful as you would perhaps think in the beginning. We've seen some incumbent banks try digital native approaches kind of as a standalone proposition, which is an interesting experiment. But if you're not able to transform the culture or have the business of the entire bank behind that strategy, it is difficult to see the success as well in this approach. We've seen that with RBS and Bo, for example. I guess that's what we discussed a couple of episodes ago with Paul as well on the podcast. So these type of strategies, standalone propositions, interesting. We'll see how some of these banks, even in the Nordics, who are trying to do something similar, will fare with these things. But I think it will really come down to the cultural transformation of the bank itself and the operational capability of the bank, and how do you actually align so that these new propositions are not directly competing with the old organization, because they will automatically be kind of shunned by the other parts of the organization. So it's a challenging path, but nonetheless, I mean, taking all of this apart, I think if we are able to encompass or incorporate new technology and transform the culture enough so that we move to the next stage, I think that's a very, very interesting future. Paul, you asked, what's beyond once all of this is done, what's going to happen next? And I kind of referred to that a little bit in my first comments, which is that what does it mean when we actually move to a true real-time economy? I think when we have standard infrastructures that are able to react in real time, and we use AI and the infamous blockchain capabilities, for example, on top of this, that creates real-time transactional networks where we are able to maintain trust in a sufficient way, because these organizations are also grounded in the legal frameworks of the countries where they are operating in. I think this kind of automated real-time economy has fantastic opportunities. One of the examples that we've seen in other industries, for example, and I know that I've talked about this before, so sorry for any listeners that gets to hear this for the fifth time. But the example of moving from postpaid to prepaid in the telecom world is an interesting one. If we look at the kind of development of postpaid networks when mobile phones were kind of a new thing, effectively it meant that the mobile operators had to take a level of risk on all of their new customers, because they were able to send the invoice at the end of the month based on the usage of the mobile phone. This, of course, excluded huge markets in the world, because effectively it's really hard to do this kind of credit checks in scale. So prepaid opened that up, and the key enabler in the prepaid really was the real-time charging capability in the mobile networks. So you were able to preload the card and charge it in real time, so that the mobile phone gets shut down if you run out of credit. Now, what if we take this similar approach into the world of finance? What if we're able to really calculate everything in real time and move from a postpaid invoicing world into a true real-time world where everybody gets paid in real time with real cash and liquidity immediately available upon performance of a contract, for example? I think this kind of efficiency on a society level could be huge going forward. And I think that is what is kind of the thing in the horizon that we must kind of go towards after we solve all these technical problems of core banking.
I think you're absolutely right. And if you look at the sort of journey that society is moving towards, the notion of society 5.0, but it does spring right round the loop again, right, Philip? Because it comes back to the fact that the core systems of the bank needs to be able to adapt to that new way of thinking and that new real-time approach. And most core banking systems today in operation aren't able to make that switch and to be as agile as needed to be able to adopt to that, right?
Yeah, I mean, I think this. So just to quickly comment on that. So the systems, the old systems, they were built when they were built to comply with the realities of the world back then, which was batch-based, efficiency, high trust, low error scenarios, and they are brilliant at that. But now, when everything is connected, we must rethink these capabilities, of course.
Absolutely. Tom, you were trying to say something.
Yeah, no, I mean, I just wanted to touch on the culture point, because I think the culture point will ineffectively directly relate to the innovation point, which is, if you think about all the sort of most unique propositions in the market in a fintech space, they're absolutely doing that. They're looking at that real-time transactional spend. They're giving direct benefit to customers in the context of how they lend, or even how they sort of look at that financial journey in terms of planning for the future. And I think none of that really will come or has come without that marriage between really good engineering and business innovation. And the problem is that you can't have business innovation without having a very driven engineering technology culture directly within the bank's IT team. And I think you touched on this a little bit earlier, right? I mean, for me, leaders or IT leaders are a bit like tea bags, right? You can only tell if they're any good in hot water. And I think the hot water now in a post-COVID world is, can your systems keep up? And yes, you can build the layers on top, and you can do different things. You can make the WYSI front end, look very swish. But if you can't get to that data in real time, and then what you do with that data in terms of, looking at the products in a very unique way, it's going to be extremely, extremely challenging for many of the incumbent banks to compete.
Absolutely. And I think that's one of the key issues around digital transformation, if particularly looking at exiting out of the COVID situation, like you just said. Most incumbent banks have been very, very good at digitizing their front ends to create new shiny apps and digital features, but the transformation of the back end has not happened at the same pace. And there's still a lot of manual processing, etc., that's happening at the back end for a lot of the incumbent banks. And for the back end to be able to catch up and to deliver against the promises of the front end is now one of the big hurdles for them, right?
Yeah, this for me is a really fundamental point. I think the problem is in taking second generation systems or looking at products in a very traditional, financial products in a very traditional sense. The problem is you're going to look like everyone else. And you talked a little bit about RBS and Bo, and you've seen other sort of neo entrants leave particular markets because there's nothing different about them. And I think this is the challenge for anyone listening, is how do you enable from a core banking / product perspective that innovation without restricting innovation by restricting the product set to themselves. That's, I think, going to be the hardest challenge for anyone migrating product en masse. We've obviously looked at it in a very unique way, and that's what we've spent the last 5 years doing, which I won't get time to go into today. But for us, it's all about being able to get hands-on into the code and really engineer to the nth degree, whether that be the legacy product, because you need to move it over in the context of mass migration, or the fact you really need to do unique things with transfer rates, whether it be blockchain or other elements within the product themselves. These things ultimately come down to engineering, and that is a fundamental point for any, executive innovator looking at the future of where this is going.
Just quickly, Tom, I mean, you've worked a long time in this space of core banking. You worked at a more traditional leader in the past at Temenos, and you're now with the new kid on the block, right? Thought Machine. In 2 minutes, could you sort of give us the history of Thought Machine, where it came from and what makes it stick out from the crowd?
Sure. So Thought Machine was founded by a gentleman called Paul Taylor, who sold his company Phonetic Arts to Google a number of years ago. And essentially his ethos was to create the best engineering community in the world focused on financial products. So for the last 5 years, what we've been looking at doing is building a platform for exactly what we've been discussing today, right? Core banking migration, with the notion that the product itself is innovative and that it doesn't look at sort of the way that other systems have sort of replicated old technology on new infrastructure, i.e. the cloud. So it's not a tin in the sky. And we're now around 350 people in London. We also have a number of people out in Singapore where we have a few customers there. We're just sort of looking at sort of the future of all where this is going. We're quite excited actually by some of the product propositions that we see coming to market, and the fact that sort of you're seeing the blending of things like credit cards, saving accounts, current accounts. These things really, really interest us in terms of where the industry is going. So yeah, I mean, very happy if anyone after this podcast wants to have a chat about Thought Machine. You can find us at www.thoughtmachine.net, or I'm on LinkedIn at Tom Bentley.
So let's change pace a little bit here. Coming towards the end of the podcast, got something new and interesting. Villa, Tom, I make no secret about the fact that I am a huge tech nerd. You both know that, particularly you, Villa. And I love gadgets. I mean, technology items, both when it comes to work and personal use. I mean, all the IoT stuff I'm doing with my racing car, not all the time very successfully, but I try at least and cloud enable my racing car, etc. So I got really excited the other day when I read in an article on, I think it was Tech Radar, about the new Apple glasses, or Apple Glass, I think they're going to be called. I mean, the internet basically is in a frenzy on this, and I can understand that. The minute you get down to Apple and Apple products, it always becomes almost religious, right? But being Apple, I hope they come out, and being a person that has to wear glasses, just like you, Villa, I can see this as a great update to my frames. What do you think?
Yeah, I think one of my friends in US actually said it best a couple of years ago already, that I'm not gonna get LASIK surgery because there's gonna be AR glasses, and I need to have an excuse to wear AR glasses, so I'm not gonna get LASIK surgery. But yeah, I mean, AR is fantastically interesting to me. I was one of the 2013 infamous glass holes wearing Google Glass in public and getting shunned for it. So I was a bit of an early adopter. I think the breaking point for me when I was using Google Glass for a brief period of time was when my wife told me that look, Villa, if you're gonna kind of go out in public wearing that thing, you will not be seen with me for sure. So I guess that kind of gave me a pause and think that maybe perhaps this technology is not ready to go yet. But many things to unpack there. I think the AR proposition is interesting. Obviously, having a digital overlay on physical things is a fantastic promise for banking and beyond, of course. But the technology really in 2013 wasn't there yet. It was based on a camera and kind of a flimsy display in front of your right eye that was not really connected to the objects that you saw in front of you. It's more of like a notification screen more than anything else. You really weren't able to connect it to your surroundings. And I think the technology that Apple, is rumored to do. So, I mean, let's be clear, it's a rumor. We're probably going to see something in 2021 or 2022 even. We don't know. But if it happens, I think the fundamental thing that's going to change from a technology standpoint is really the ability to connect the things in your field of vision with the digital overlay with a fair amount of accuracy. And the key thing there is the LiDAR sensor that is rumored to be the key part of the first generation of Apple Glass. And there's not going to be a camera, according to the rumors, in the Apple Glass. And I think this is a great idea, because having a LiDAR, small-ish LiDAR sensor on the glass allows it to map the environment in a non-intrusive way for anybody who might be in front of you, and kind of create this digital map of your environment, and then create with the UI or the development kits that they're going to provide, able to kind of connect these digital overlays on top of these objects, again, in a privacy preserving way. And I think this is going to be the fundamental thing, in terms of real immersion and, real usability of objects around you. And I think I'm very, very excited, if you didn't hear it from my tone of voice already, about
Absolutely.
about this.
We can hear it
about this thing. And I'm of course looking at this from a kind of a fintech banker perspective, and I'm sure there are interesting e-commerce and indeed commerce applications that we could do in terms of pricing, spending, expenditure categories, even, things like we've already seen from, I think it was Westpac Bank did some years ago already, did an application where you were able to pick up your credit card. And as you looked at your credit card through your iPhone camera, you were able to see your spending categories and your available balance on that card, for example. I mean, with a separate, having to have your phone up and your card up, I think it doesn't really make much sense. But imagine if you would have that capability inbuilt to your glass, for example. So you just, when you look at your card, you already, with an authenticated view, you're able to see your expenditure on that specific card that you're holding. And I think these types of, having this ubiquitous digital overlay around you and having it like automatic experience, I think that's a key change, a game changer in the coming years. But again, let's hold our horses back a little bit. I think we are, of course, getting way too excited, way too early. I think it's going to take 2 or 3 years before we will have a proliferation of these devices. But I think it's Apple's kind of rumors at this point are, making the AR geeks like me a little bit excited right now. So yeah, exciting times.
Absolutely. Tom?
Yeah, I don't have much more to add to that. I guess the only thing I think that's interesting is, I always think about SSO, so single sign-on and authenticated processes, right? So I think that's the interesting thing about Apple Glass, in terms of the fact I don't need to type in passwords, that almost an extension of Face ID. But I would challenge one thing. I think the problem with Apple, and I'm a huge Apple user, is as time's gone on, other than the AirPods, which I'm currently using now, which I absolutely love, just because they're so easy, I think the Apple ecosystem over time has sort of lapped behind its other, competitors. And I wonder with this, again, where will the focus be? Will it be, corporate/financial service applicability? Or, of course, you can imagine they're going to go for the mass retail market. And I think, again, it comes down to that question of, it's like when AirPods came out, people dispelled the fact, they'd want these things hanging off their ears, they'd be falling off. The fact they don't fall off, the fact they're so easy to use, and in many ways they enhance your life, they're a great addition. I have a huge, question mark around Apple Glass, how they will make it less intuitive and more enjoyable to use on a daily basis. I think that's the biggest challenge they face.
Yeah. Well, unfortunately, my friends, as always, time flies when you're having fun, and it has been a fantastic episode of Fintech Daydreaming. But before we close, Tom, Villa and I would like to give you a chance to let the listeners know how they can find you, how they can get in touch with you after this episode, and maybe continue some of the discussions and find out more about Thought Machine.
Gents, thank you so much today. It was great to chat about everything core. You can find me on LinkedIn. I'm Tom Bentley. On Twitter, I'm TommyBHQ. And of course, please check out Thought Machine if you're interested in learning more about cloud native core banking.
Fantastic. Thank you again for coming on the show. And thank you for all the great insights that you've shared with us here today. I think I've learned some new stuff. I hope Villa has as well. And it's been a fantastic discussion. And thank you all to our great listeners out there. It's nice that you stay with us. Now, do you have a fintech subject you would like Villa and I to cover in a future episode? Or maybe you have a great story to share and would like to join us as a guest? You can ping us on LinkedIn, either of us, or the Fintech Daydreaming page on LinkedIn. Or you can reach us directly through the Anchor FM page. So see you all again in 2 weeks' time, my friends. This has been Fintech Daydreaming.